Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What's going on in the markets? Well, they're trying to push them up higher, right? They're trying to make new highs on the S&P. They're trying to get a new high on the NASDAQ, trying to get a new high. Now the Dow, they're having some trouble getting it back above 40,000. We hit that 40,000 number. We've come down and we're trying to push it back up again. It's a topping out pattern. This is what I'm seeing. I think that eventually this market will break. Well, I know it will break. It's not going to end well. I mean, it's definitely the biggest bubble the stock market's ever seen. A 14-year bull run is going to end, and it's going to end, well, it's going to end bad, right? I mean, but for the time being, as long as we can stay above that 20-day, we can keep pushing this to new record highs, new record highs, new record highs. Okay, but we got what I would call a canary in the coal mine. Okay, I'm going to get over to the real estate side of things now. And we want to talk about, well, commercial real estate. Okay, there's these things that are called real estate investment trusts. Real estate investment trusts are very common. They pool together a lot of money kind of in a syndication process. And then they go out and they buy big office buildings, shopping centers, big apartment complexes. And these things are having a lot of pressure put on them. But here's the thing. Now, I'm not going to pick on Starwood, but Starwood, their real estate investment trust, they're not allowing people to redeem it, not allowing people to get their money back. So all the investors that have invested in it, they're locked in, right? They can't get their money out. They can't get their money out. Why? Why can't they get their money out? Because it would crush the real estate investment trust. It would go to zero if they had to sell everything. Because what does the real estate investment trust do? Well, they borrow money, right? They have debt and they buy these things on leverage. You put your money in, they go to the bank, they get some more money, and then they buy things, right? But they've lost your money already, so they can't let you have it back. They can't give it back to you because if they had to sell their assets are already half off and the bank's in line before you are. So you, as the shareholder of the real estate investment trust, would be completely wiped out. So what do they do instead? They say there's no problem. You just can't get your money back yet. What they're doing is they're praying that these assets reinflate themselves. And the Federal Reserve is going to try to print money and reinflate this asset bubble, right? But this asset bubble is already down about 50%, 80% in a lot of areas. A lot of the big buildings are selling 80% off already. That is a crash, in my opinion. That is a big problem. But this is the canary in the coal mine, right? Okay, because here's the problem. Here's the problem. You got these real estate investment trusts, and people can't get their money back out of it. So what happens? Okay, so the banks are the ones that are going to be left holding the bag. You see, okay, so the banks loan the money, right? But they're underwater already. Even if they loaned it at 50% loan to value, let's say they bought a $100 million building, took 50 million from you and 50 million from the bank to buy it. You see, your money's wiped out. The bank's money, let's say that $100 million building is only worth, let's say, 40 million now. Well, the bank, they're into it for 50 million. They're already $10 million underwater. So they just get the keys back. It's called jingle mail from the real estate investment trust. And now the bank owns the building, has the fire sale, sells it even lower, maybe 30 million, gets it off their books, right? Okay, so the bank lost money. You got wiped out. But what they're saying is there's not a problem because they're not marking their assets down to market value. If they had to mark them down to market value, these real estate investment trusts would already be gone. They'd already be out of business because they're underwater. There's no equity left in them. Now, this is the problem. This is what's going to happen, right? Okay, so the banks, this real estate, the commercial end of things back with mortgages, right? So the banks are holding on to this mortgages, a lot of regionals. Anyways, they're not going to get their money back. They're already underwater. So what's going to happen? We're going to start seeing the banks fall over. Now, so far, I think we've only seen one or two this year, right? Anyways, it's been very, very quiet, but they're not talking about this. But here's the thing. $1 trillion, $1 trillion of these loans are coming due within the the next 12 months. Okay, well, that's a problem, right? Because they can't roll them over. They're underwater. They give it back to the bank. The bank's losing money. The bank's already in big trouble. So the banks are going to start to go out of business. Now, here's the thing. Okay, the FDIC, they insure your money in the bank, right? They insure your money. But the FDIC has less than 1 cent for every dollar you have in the bank. You have a dollar in the bank, FDIC has less than 1 cent. Actually, about 1/2 of a cent is what they have. But you got a dollar in there. You're not going to see your money back. These banks are going to start to fall over. But Mike, the FDIC is going to bail them all out. Now, that's great, right? Okay, they bailed Silicon Valley Bank out. And they bailed them out even for the uninsured creditors were bailed out by the FDIC. Whose money is that? Taxpayer money, my money, your money. We came in, we fund the FDIC with extra money so they can bail them out. And this is what's going to happen when the banking system goes down. Now, the FDIC can handle one bank at a time. They are not equipped to handle when 10 banks a week go down or 100 banks in a month. You get 100 bank failures in a month, the FDIC flat broke, the federal government has to start printing the money, right? And this is the canary in the coal mine, the fact that you can't get your money out of these real estate investment trusts because they're underwater with commercial real estate that the bank has loaned on. The banks will soon be starting to fall over when $1 trillion of assets come due within the next 12 months. You're going to see these banks going down like dominoes. Do you feel safe with your money in the bank? Now, I do not. I don't feel safe with my money in the bank. But that's just my take, right? See, it's a problem. The banks have a big problem. But who else? Who else has a problem? Who else owns this commercial real estate paper? Well, it'd be things like your pension funds, right? Pension funds right now are over 5 trillion underwater already. Already 5 trillion underfunded. Now we got that $1 trillion coming online of commercial real estate paper that's underwater. And it's going to put more pressure on these pension funds. The pension funds are going to start to drop just like the banks, just like the banking system. The pensions are going to start to fall also. So you got the banks falling over. You got the pensions falling over. What's that going to happen? Oh, but Mike, the FDIC is going to come in, save the banks, and then we're going to just, I don't know, we'll prop up the pension funds somehow. No, what's going to happen is they're going to print trillions and trillions and trillions of dollars. That's the only choice they have, right? They can't let the whole financial system collapse. But it is collapsing. The dollar as you know it, the dollar as I know it, is going away. I say it's already lost 100% of its purchasing power. The only thing that still props it up is confidence, right? People have confidence. Like if I give you $20, you'll take it for, well, whatever I owe you, right? Let's say you're a storekeeper and I want to buy something, give you $20, it still has value to you. You take the 20. Pretty soon you're not going to want to take it because it's worthless paper. Okay, and the canary in the coal mine is the real estate investment trust, which the commercial real estate comes already crashed. It's already crashed. It's already done. The damage is done. They can't save this. It's inevitable. It's a death cycle. It's a death spiral. We're circling the drain right now. We're circling the drain. The dollar is going to go away. Why is the dollar going to go away? Because we're going to print trillions and trillions and trillions of dollars. Now, some people say 5 years. I say we have less than 3 years left of the dollar as we know it. So you have to protect yourself. Now, I personally recommend not keeping a whole lot of money in the banking system because you may not get it back. They're going to do what's called bail-ins. You see, the FDIC doesn't have the money, so they might actually do bail-ins with the money that you have on deposit at the banks. This is just my take. If you feel safe in the bank, leave your money in there. If you feel safe in the stock market, keep staying in there. But I'm telling you, when this comes down, it's going to come down. It's going to be hard, right? Now, where do I feel safe with my money? Now, I do have money in the banks. I don't like it. I got money in treasury bonds. Treasury bonds, I feel, well, yeah, they'll pay me back, right? Pay me back the 4 or 5%, but the inflation rate's going to be up 10, 20, 30, could go as high as 50% in the next 3 years. I mean, it's like a hockey stick. It went like this and now it's going like this. That's our debt. I'm talking about our debt. I mean, it just keeps going parabolic. Why? Because we have to keep printing money to keep the system alive, to keep bailing everything out. But believe me, they're not idiots at the Fed. They know their days are numbered. We're going to get rid of the Fed when this crashes. I hope we do. But they know they're losing power, right? They don't have any way to save this anymore. The Federal Reserve, they're bankrupt. They're going to go out of business. A dollar is going to go away. The thing I feel safest with still is gold and silver. Now, don't get me wrong. Gold and silver, very volatile, right? I mean, silver was up, $4 in 2 weeks, came back down $2 or $3, gave all of it back, shooting back up again. It's going to be all over the road. And I hope it pulls back. I like to buy on the pullbacks. I hope gold gets below $2,000. That'd be great because I don't put all my money in at one time. I average cost in, right? I buy over time. If it pulls back, I'll buy some more. I get paid. I'm selling a house this weekend. I'll get a large chunk of change from that. And I don't like having money in the dollar. I don't like having money in the banks. So eventually I'll dollar cost average that money into gold, into silver. Silver is the best buy. It really is. I mean, I don't know the silver to gold ratio. What is it? What is this? Like 80-1, let's call it, right? What is it mined at? What do they pull it out of the ground at? About 7-1. Now I think it'll get down to 15-1 or 10-1. So silver is the best asset to buy. The problem is it's heavy, hard to store, and I mean it's just kind of cumbersome compared to gold. Gold, you can put 100 grand in your hand and I mean, it's nothing, right? $100,000, you just take it and put it in your pocket and walk away. I mean, okay, so gold is a much easier, but it's not the best buy. Silver is the best buy, cheapest asset on the planet. Now, if you're just doing paper, like the GLD is paper, the SLV, paper silver, GLD, paper gold, right? Okay, now these are not real, right? These are not real. I mean, there's ratios. Okay, so they say for every 1 ounce of real silver, there's 400 paper ounces. 400 paper ounces. That means if you're in the SLV, you're like behind. They've sold that silver. They've loaned it out to 10 different people. There's no silver there. And if there is, it's already been spoken for 10 times over. There's 400 ounces of paper. They can make all the paper they want, but what they can't make is the physical silver. So you want to have it in your possession when this hits. And who knows when it'll hit, Maybe I'm wrong. Maybe it won't be 3 years. Maybe we have 5 years. But I do know it's going to hit, and it's going to hit in my lifetime. It's going to be painful, very painful for a lot of people. People are not going to like this when it happens. People don't understand what's coming. Now, you do because you watch the channel, right? But 14-year bull runs, that's not normal. I mean, the young people, they start investing 28, they're 40 now, and they've never seen nothing except in straight up. Okay, well, this is great. They've got all their money tied up in there. No, don't do that. Get out of the system. Get out of the system. Get out of the system. That's all I can tell you. I mean, I don't want my channel taken down. I mean, you start talking about the Great Reset and they'll just pull you off the air. It's amazing. We don't have freedom of speech anymore. We can barely talk about what we're talking about. But you want to protect yourself. Look, that paper stuff, not real. You want to have the physical silver. You want to have the physical gold. Gold, paper gold is like 200-1. Paper silver, 400-1. There's 400 people waiting for every ounce of silver out there. There's 200 people waiting for every ounce of gold. They're never going to see it. If you don't have it in your possession, you're never going to see it. Look, let's say you have the SLV. Oh, look at bad times hit. Silver went up to $500. I'd like my silver. Well, we don't have your silver. We'll give you some paper. But I don't want paper. I want my silver. You're not going to get your silver. You got to have it in your possession. Now, can you get it in your possession after the dollar goes away? No, it's too late. No one's going to trade your worthless paper for silver at that point. We're only going to trade silver for valuable things. Maybe we'll trade some silver for real estate. I say 500 ounces will get you the average price house. You got 25 ounces of gold back in the days of Weimar Germany. You could have bought a whole city block. These days are coming back. People think it's a long-term thing. One comment, he thought that gold's a play for the next 20 to 50 years away. No, 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 no. The gold is a play for today. That's where you want to be. It's actually outperformed the stock market for the last 24 years, and it's continuing to outperform it this year. Why is it outperforming it though? Really, why? Because they're printing money. Money is going away. Money is worthless. You got to get some out of the system. Yes, I have money in the banks. Yes, I have it there. I don't like it there. I don't sleep well. But if I got all that wiped out, I could live off my gold and silver. I could live off, real estate. I love real estate, but you got to have it paid for. It's got to be paid off. If you're in debt on your real estate, no, it's not good right now. It's a bad time to buy it. Paid off real estate, yeah, it's going to get cut in half. Yes, my house is going to get cut in half, but it's paid off. It's not going to hurt me. If I lose my money in the bank, I'm going to be really sad, and but I'll live. I'll be all right because I got stuff outside the system. You want to have some money outside the system. You got to do what you got to do, but that's just my take. I'm Tall Mike. You like this stuff? Give me the thumbs up. If you really like it, punch the subscribe button so I can talk to you again really soon. Bye-bye.